maybe be able to better connect how oil futures impact the real economy. So those were ideas that we had tossed out. We did receive some substantive feedback on that. What has to happen now is we have to essentially cull down the potential topics and pick one that would be the first competition that we would do. It's probably best to aim for a very discrete question for the first one, and learning from some of our colleagues over at the FCA, they've slowly expanded the scope and scale of those competitions, but thus far it's derived really meaningful insights and seeded some ideas that the private sector has continued to run with. And that's ultimately the objective. There's actually a website, challenge.gov, which is just a US government hosted website that lists all of the open prize competitions that are available to the market. Now, what's interesting about what we're trying to do is I believe will be the first time that a federal financial regulator seeks to utilize that tool. Typically, we've seen it in the NASA context around space or science, scientific innovation. But if it's true that we all believe that technology is playing an increasingly large and important role in financial markets and services, then I think as financial regulators, we need to be just as involved in thinking about those technologies and really understanding them. Because at the end of the day, if you ask where are some of the emerging potential risks and opportunities, but certainly risks going to emerge, it's probably going to be a lack of technological literacy. So the more we can get our hands on the technologies and better understand them, I think the better from a regulatory perspective.
Good afternoon. Anton from Settlement Center, CCP Oversight, Ukraine. I wanted to ask you, during your research, have you come across at any CCP or clearing solutions that are innovative or they're pretty much standardized?
So, again, our scope is to think about emerging technology. So we're looking at what's new and what's novel. Now, certainly, as everyone likely is aware in the room, you hear a lot about the potential of blockchains to impact or potentially improve efficiencies in the clearing and settlement process. This gives me a good opportunity to talk again about that spectrum and maybe flesh it out a little further. This concept of distributed ledger technology is I've conceded that it's going to be used very broadly. And on one end of the spectrum, we're dealing with what's probably more simply thought of as interoperable databases, right? That standardize data formats and speak to each other. And I don't say that in a disparaging way. I think there's a lot of value that can come out of new capital markets computing infrastructure that forces standardization and interoperability. On the other end of the spectrum, you have the open public blockchains. Now, of course, that envisions a very different looking world of clearing and settlement, and one that, for a variety of reasons, would face many challenges scaling to actually impact some of our traditional financial markets. That being said, we are obviously, our agency oversees Bitcoin futures markets, and there are physically settled products that are therefore relying on a blockchain. So it is something that we're paying attention to and overseeing in that narrow sense. Now, more broadly, on the permissioned side, the interoperable database side, of course, there's a spectrum here. So some of those systems take on certain characteristics of a public blockchain. They may be using cryptography. They may be thinking about certain types of consensus mechanisms. And yes, I mean, we're interested to see how that technology may drive efficiencies, but I think that's going to be an evolutionary track, one that is perhaps driving an evolution of traditional intermediaries, though, who seek to adopt that technology. And some large players in our space have been thinking about how you use DLT to drive efficiency in post-trade and clearing and settlement processes. So we're paying attention essentially across the spectrum.
Hi, this is Sarat Malik from Securities and Exchange Board of India. In our country, the fintech and banking technology is much more improved, and there is a lot of innovations over the payment gateways and online payments, and so many companies are coming out in the banking sector. But so far as the securities market or commodity sector is concerned, we have already online trading, and we have payment, CCP and others. Already, I mean, that is technology already we have improved in that. Even we have IMSS also. But what are the areas you suggest that fintech will play a bigger role like the banking sector. And a country like India where we have, I mean, it's an emerging market economy.
Yeah, so I think to answer your question, I guess I have a few thoughts, because you said a lot there. Yes, India has been taking incredible strides in a lot of areas of technology, certainly in the payment space and digital cash, essentially. And so I think when you're talking about retail banking, it tends to have a very kind of public, everyone sees it, because you're dealing with individuals and individual either investors, users, and so the entities that are engaging in those activities also tend to want to brand themselves quite a bit, and so there's a lot of publicity, I guess, around the retail banking side. What strikes me about capital markets and financial markets is that innovation actually tends to take place a lot earlier there, but it's a lot quieter. So what I mean by that is that you talk about the world of algorithmic trading. Well, what is algorithmic trading? It was an early application of data analytics and early machine learning tools being applied. And so you see a lot of these innovations take place, but it's not going to be the same kind of general public interface that drives all the attention that I think the retail banking side gets. But if you're then asking me where do I think we're going to see a lot happening within capital markets, it's this confluence of cloud with, whether, again, when I use DLT, I'm using it very broadly to talk about standardized interoperable systems. But if you're standardizing data and you have interoperability of databases and you're moving that to the cloud, which is a ready-made scalable platform, and you build on top of that data analytics and machine learning tools, I think it's going to unlock a lot of innovation. We're already seeing it, but I suspect it'll just move even faster. So you know, from my perspective, I've actually, in my personal background, spent a lot of time on the retail banking side, as well as now on the capital market side. There are cross currents that definitely cut through, but it's easy to miss, I think, how much is actually happening on the financial market side of the world, because it tends to be a little bit more behind the scenes. Oh, and so the statement was especially around financial inclusion, and absolutely. I mean, one of the characteristics, and I usually do mention that, one of the characteristics of all fintech, and again, it goes back to the internet and mobile, that drives ready-made adoption and scalability globally, and a lot easier access to plug into the system. So if you lack traditional infrastructure, whether it's traditional banking infrastructure or other types of, you can leapfrog that essentially through the use of mobile and the internet, and include and provide access to many more individuals. And on the retail banking side, I think that's one of the very Yeah, so the statement was, you know, providing traditional asset management, mutual funds, other types of services to the general public, and you're able to access it essentially through mobile, internet. So I think that's pretty. Yeah. Yeah. I'll hear you and I can repeat.
Thank you. My question is related. If you see the results of the outcomes of your efforts of the CFTC influencing the rule-making process to make the rules in the future, the idea to have a regulator for the 21st century, the rules more suitable for the use of technology.